uh, I'm doing another review. I mean, it's the review of the same news release, which is the SNBCS Composite 20 HPYY and Consumer Confidence. Yep. We'll be ignoring this last candle because that's the 29th. So we'll be reviewing only 29th and before, right? So what's happened right now is on the weekly time frame, we have taken out liquidity from rejection block, right? Prices at extreme premium, and we've taken out the liquidity on the daily time frame. If we refer to the IPTA date ranges, IPTA data ranges, yeah. So these are the first 20 days, right? Yeah, these are the first 20 days, and within these first 20 days, this is the lowest low. Let me just okay, so the lowest low is this. Right, for the last 40 days, the lowest low is this, right, and the highest high is this. So just for the reference, I'll mark the lowest low, which we'll refer to later on. And then for the last 60 days, yeah, this is the highest high. Okay, I just get rid of this line. So this first block is the 20-day time period, second is the 40-day time period, and the third day is the 60-day time period. I'll do one more thing, which is that I'll draw the respective equilibriums for all of these. And well, the highest high 104.36, 104.44. So this is the highest high in the last 60 days. And this is the lowest low in the last 60 days. So these both have the same equilibrium. All right. Now what I'll do is I'll mark the PDRAs of the last 20 days first of all. Considering that this is the equilibrium, we have taken out liquidity on the daily and the weekly time frame from a rejection block, so we can see some retracement, right? We can expect certain retracement, and if we do expect the retracement, first of all, I'll come back to that later on. Because this is a bullish order block and this is a propulsion block, the retracement shouldn't go below the mean threshold of this propulsion order block. Propulsion order block. So I'll just we do have the benefit of looking back into hindsight, and we can see how beautifully the mean threshold was respected. Right. I'll mark the high of the order block, the bullish order block, and right, that's the bearish order block. On the daily time frame. All right, that's where I left. What else do we see? Well, there are still a lot of PD arrays on the lower time as we go lower, because for example, we can see a fair value gap right over here, but I don't think so I need to mark those levels. For example, the fair value gap right over here, because that's not our concern right now. The only thing that I have figured out right now, my observations are that institutional order flow is bullish. Took out buy side liquidity from weekly rejection block, formed bearish order block on daily. These are the things that we know as of now. Observations. That's it. These are just the observations. Alright. So now that we know that since we take an order liquidity from the weekly time frame PD array, even though we might or we cannot expect the price to just completely reverse, but what we can expect is certain level of retracement happening, right? Now let's go on the 4-hour time frame. All right. So the bullish order block that we had on the daily time frame is this. These between the bullish order block and the propulsion order block mean threshold, we see a fair value gap, and we also see a fair value gap right above it. I'll mark that as well. All right. So we need to anticipate and look at price before this orange line. Also, one more thing, that the current trading range is this, and we've already come at equilibrium. We have come to equilibrium. Could this be known as an ICT breaker, because that's a low, it's a lower low, price came down, it did go deeper into the ICT breaker and then went up again. Okay, let's see. What else do we see? Well, that's a 4-hour low. These are relatively equal lows, so I'll take that into account. What else do we see? See the 4-hour low, how beautifully those 4-hour low align on the 1-hour time frame. The propulsion order block. A lot of these PDRAs on the higher time frame have a confluence on the lower time frame. For example, order block on the high time frame will look like a fair value gap on the lower time frame, right? That's low, price came down. What else should I be seeing over here? The 1-hour time frame, what I'll do is I'll mark equal highs and equal lows. I don't even know when I did this, but I'll mark equal highs. So not only these are two equal highs, but it is also inside of a bearish order block on the daily time frame, right? This lower line is the bullish order block, and somewhere around the mean threshold of the bearish order block we see the equal highs. If this is the low and this is the high of the order block, that's where the equal highs reside. You've got equal highs, we have got equal lows. Well, equal lows are already taken out, so I won't take that into consideration. Okay. Let's go to the 15 minutes time frame. Yeah, there's a lot of buy side liquidity over here. I'll just get rid of this bigger vertical line, because even though it represents the weekly rejection block, but it's causing a lot of untidiness on the charts, so I'll get rid of it. Now what do we see over here? Our observation were institutional order flow is bullish, took out liquidity, so we can expect the price to go down. It can go down by going above old highs into a PD array, right? So price went above the old highs into a PD array, which is an order block. That's a bearish order block right there. It went up, okay, so first we saw the London session, we experienced a delayed protraction in the London session. It did not form a Judah swing initially, it just rallied right from the start, came down. This is a delayed protraction. When the protraction happens after 2 a.m., which is the start of the London kill zone. Price went up, came down, it is a fair value gap, and then rallied, right? Went up, took out the sell side liquidity, took out the buy side liquidity, went into a bearish order block, and then came down. Within this fair value gap, went up and then came down. It came down, and the entire fair value gap on the 4-hour time frame, right, absorbed the price into itself. Let me just see if we can get a better entry by going on the lower time frame. That's a market structure shift. The short-term low was taken out. It opened a fair value gap right there. But we did not see price coming back to it. Let's go back or go on a lower time frame. I'll keep on going lower till we find a setup. Okay, I do see a setup over here. The short-term low was taken out. Fair value gap right here. Price came up, and then that's where we could have entered. The setup unfolds at 9:38. The initial news was released around 9, so yeah, 38 minutes, exactly how we experienced in Euro USD. And then as the second news came, price went deep into our favor, right? So yeah. Let us just go to gold and see how gold was performing. 29th August. So this is the look back period for us, right? The equilibrium for the first 20-day range, which is what EBITDA refers to, right? This is where we are at right now. 28th is where we are at right now. And what do we see over here? Right. Let's just mark. First of all, let's just see what the institutional order flow is. Up until this point, we were bearish. Right now, we are bullish. Okay. Because there was a market structure shift. As in, yeah, that's where the short-term high was taken out. So we can say that we are bullish. Let me just mark. So that's a rejection block with equal bodies and long wicks. I don't like going lower than the daily time frame on gold because the price is quite, I don't know, it's just extremely tight. Well, can we say that this and this is one order block? Sure, we can. I don't know if we can, but I'll take this as an order block on the daily time frame. And also because bodies of the of these candles are respecting this particular order block, so that's why I'll take this. These are two equal highs. That's a bullish order block. Sorry, the bearish order block. Let's go down to the 4-hour time frame. What do we see over here? Within this range, let me just mark the equilibrium and then I'll get rid of the fib. And let me just change the color of this so that I can figure out that's the equilibrium level. Okay, so we came up, left this fair value gap, price filled the fair value gap and then rallied. Okay, I'm not going to look at this because this is the 29th this thing, but we can see that prices come down. That's the market maker buy model. Price going down to go up. I'm pretty sure that is gone into a level of liquidity. Yeah, so it went below this low within this fair value gap. So price filled this much portion of the fair value gap. This much portion of the fair value gap was filled, but it left open this much fair value gap. Right, price came down right to the pip and then it rallied. The reason why I'm taking this area and not this fair value gap is because as price rallies on the institutional level or even on the retail level, people tend to place their trail their stop losses somewhere around here and not here. So price came down to a level of support to go up. So that's the market maker buy model. Market maker buy model came down. We saw market structure shift on the 4-hour time frame. Took a lot of short-term highs out. Came back, left this fair value gap open, and then we can expect the price to go up. Okay. On the 4-hour time frame, if we were to look at the current trading range, it will be from this low to this high. Price came down into this order block. This would, I guess this would be an order block on the 1-hour time frame. Yeah. Price came down right to the pip and then went up. Right, it took out liquidity from here into the fair value gap, into the order block and then rallied. So 4-hour time frame, I just mark all of the PD arrays over here. See, a lot of the PD arrays on the 4-hour time frame have a confluence with some PD array on the daily time frame. That's a low. That's a fair value gap. These are equal lows. These are equal highs. So the line below this line, this is the daily equal, these are the daily equal highs, and these are the 4-hour equal highs. So you see how close they are to one another. That's an order block, and that order block is extremely close to the highs on the 4-hour time frames, and these are equal highs. These are highs these are highs that have long wicks, and the bodies are extremely closely located. So there's a lot of liquidity right there. That's a fairly gap, but it's filled by this candle. But then again, this is a bearish order block. So yeah. Now on the 1-hour time frame, let's just mark the equal highs and equal lows. So the price came down. Just go directly to the 5 minutes time frame. Directly to the 5 minutes time frame. Price came here below the lows. Okay, took out the short-term high, came back, left a fair value gap, never came back to this place, then again took out short-term high, again left a fair value gap over here, came back. That's where we could have entered. 930 is where we could have entered, and this is all happening on a 5 minutes time frame. So yeah, the institutional order flow was bullish because we just experienced a market structure shift after a liquidity grab on the daily time frame. So we could have expected the price to go higher. Also, it left a fair value gap on the 4-hour time frame, came back below, took out a lot of short-term lows, and then rallied. So yeah, everything was happening in their favor of our direction. And yeah, that's pretty much it for today.